Welcome back to Alpha Recap, your daily market wrap from stockalpha.ai. We're coming to you after the close with the top headlines, context, and what to watch next. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, glad you're here. Big day of market structure and operational headlines, and a few surprise ripples across funds and healthcare. Let's dig in.
First up, compute and AI infrastructure. The big new thing was ComputeConnect, launched by Architect Financial and the Compute Index. It's being billed as the first exchange for physical network for GPU compute in the US.
Hold on. Exchange for physical for GPUs? Say that again.
Sure. An exchange for physical, or EFP, links a financial contract to the actual delivery of a physical thing. So instead of just trading a paper contract tied to compute, this aims to connect those contracts with real GPU capacity being delivered to customers.
So basically, derivatives could be directly matched to real hardware. That's wild, and it could change how companies hedge compute needs.
Exactly. Analysts note that if ComputeConnect scales, it would create a tradable linkage between financial instruments and physical compute delivery. That could increase market efficiency for big compute buyers and send clearer demand signals to GPU suppliers like NVIDIA and AMD.
Right, and I mean, when you step back and look at this, institutional demand getting a clear price signal could nudge cloud and GPU vendors to adjust capacity planning or pricing.
And today, NVIDIA finished the day up modestly, so markets seemed to at least digest the news without too much drama. Analysts will be watching for lead and lag effects in pricing and options markets.
Related note, Innovative Solutions launched a forward-deployed services line to extend an AWS program into partner-led delivery. That ties partner revenues more directly to enterprise AI deployments and cloud services, and that's relevant to Amazon.
Good point. Partner-led delivery can change the revenue mix and margins for systems integrators and cloud partners. It's another way compute demand is getting commercialized beyond raw hardware.
And Douglas Elliman announced an AI transformation with Google Cloud. So this isn't just software firms. Real estate services are tying directly into cloud AI too, which gives Alphabet some indirect exposure.
Momentum here suggests we're seeing three things at once: new market structure with ComputeConnect, partner-led deployments with this AWS initiative, and broader AI adoption in non-tech industries. Together, that points to rising institutional demand for GPU compute and cloud services.
So the gist: compute is getting institutionalized. Traders and risk managers should watch how that demand signal shows up in GPU supply chains and cloud capacity.
Short reaction.
Big move.
Switching gears to funds and liquidity. There were a few operational headlines that matter for traders and risk teams.
Yeah. AdvisorShares restated net asset values for two inverse funds, Ranger Equity Bear and Dorsey Wright Short, after correcting a trade error. That's the kind of thing that can rattle hedges.
NAV restatements in inverse and short funds can complicate prior performance snapshots and force some rebalancing. For desks using those ETFs as hedges, reconciliations are critical.
And we had a couple of distribution announcements. FS Credit Opportunities and FS Specialty Lending Fund declared July distributions payable on July 31st. Those are small cash flow events, but traders sometimes time flows around pay dates.
True. Now here's the moment that made people look up. A Bitcoin futures ETF traded huge volume today. And the number that really caught our eye? It was about 402.7 million shares.
That's a ton of tape.
Also, a leveraged small-cap bear ETF and certain microcap names showed outsized intraday volume and price moves. So there was plenty of liquidity, but also sharp swings.
Right. Liquidity and volatility were coexisting, which is a trade-off. More volume doesn't mean calmer prices. Sometimes it magnifies intraday moves.
Short reaction.
Not what anyone expected.
On the fund side, the takeaway is pretty practical. NAV corrections in inverse funds can have outsized impacts on short-term hedging efficacy. If you rely on these ETFs, double-check reconciliations and replacement options.
Yeah, risk managers and prop desks, heads up.
Okay, legal, regulatory, and governance risk. This was a notable area today, and it wasn't all good news.
You're thinking about GE Healthcare, right?
Yes, Glancy, Prange, Wolka, and Rotter said its securities fraud investigation into GE Healthcare Technologies continues. That renews legal and disclosure risk for the medical equipment maker.
Legal probes often create asymmetric downside. Analysts note that until the scope is clarified, volatility can pick up and multiples can compress.
Agreed. And there was a governance win. Locify reported it remedied a NASDAQ filing delinquency and is back in compliance, which reduces immediate delisting risk. Still, the episode raises governance scrutiny until filings settle.
Also, citizens cut a price target on Flutter Entertainment tied to market-making concerns, and that had a meaningful share reaction in reports. Analyst revisions still move markets in the short run.
Quick reaction.
Interesting.
Bottom line on legal and governance? These events can materially change risk premia. When you see a filing issue or a securities probe, expect elevated headline-driven repricing until clarity returns.
Okay, defense and government-driven demand. A few small but meaningful items here.
Engineering Services Network won a $15.9 million U.S. Navy contract for lifecycle management of aircraft carriers. For a small, service-disabled, veteran-owned business, that's a material backlog increment.
AFOA's Protective Textiles Challenge through the SPARK program also shows government sponsorship of materials innovation. Big primes will be watching those kinds of projects.
And Markets projected that the battery energy storage system testing, inspection, and certification market will nearly double to about $1.3 billion by 2032. Growing at roughly 11.8% compound annually.
That highlights a services layer that will scale with electrification. Testing and certification specialists could see steady demand.
Now, healthcare operations and staffing. Mostly execution stories, but worth noting. Select Medical and Tallahassee Memorial Healthcare announced a joint venture to operate a 47-bed specialty hospital focused on rehab and critical illness recovery.
Health Management Associates named Arda Ural as Chief Operating Officer, and Worldwide Health Staff Solutions launched perioperative nurse placement services. Staffing solutions are still in demand to help hospitals manage gaps.
Operational hires and new JVs can become material if they scale or change utilization. In a sector sensitive to labor and reimbursement, these are worth watching.
Quick corporate notes. Innovative Eyewear raised about $3 million from warrant exercises. That eases near-term liquidity pressure. Advanced Technology Services ranked number 6 on Time's America's Best Private Companies list, which is a nice reputation boost.
And Specified Technologies launched EasyPath Ultra for data center cable management. Product launches like this are early cycle signals that data center infrastructure upgrades are ongoing.
Let's step back and pull together the patterns we saw today.
First pattern, institutionalization of compute. Market structure moves like ComputeConnect, partner-led deployment, and wider AI uptake point to a maturing compute services market. Demand signals may increasingly flow to GPU OEMs and cloud platforms.
Second, volatility and liquidity coexisted. Large volume moves in that Bitcoin futures ETF and leveraged instruments showed liquidity was there, but intraday swings were meaningful.
Third, governance and event risk remain active. NAV restatements, filing delinquencies, and securities investigations all produced headline-driven repricings today.
And fourth, government-driven demand persists. Small defense contracts and BESS testing market growth are steady tailwinds for certain niche service providers.
What to watch next? Quick checklist for tomorrow and beyond. Follow any ComputeConnect filings or pilot volume disclosures. Watch how NVIDIA and AMD's implied volatility or options markets react to compute market structure news. Look for further AdvisorShares disclosures around the NAV corrections. Monitor any GE Healthcare filings or company statements. And keep an eye on flows ahead of the July 31st distribution dates for FS Credit Opportunities and FS Specialty Lending Fund.
Also watch any Senate movement on H.R. 2853. If there's action, it could affect security and logistics demand tied to retailers. And follow through in that big volume Bitcoin futures ETF and heavily traded microcaps will tell us if today's activity persists.
Short reaction.
Yeah, that tracks.
Bottom line analysis. And quick reminder, this is analysis, not advice. The headlines reinforced two durable forces. One, the commercialization and institutionalization of AI compute and services, which may redirect demand toward GPU and cloud vendors and new market infrastructure. And two, recurring idiosyncratic risks like filing issues and legal probes that create differentiated volatility across pockets of the market.
Put simply, more sophisticated markets for compute are forming, and headline-driven risks are still very much with us. Traders should keep risk controls sharp and confirm NAV and filing adjustments when they matter to positions.
Takeaways. 3 quick ones. 1. ComputeConnect and partner-led cloud delivery are signs that compute is being institutionalized. 2. NAV restatements and legal probes can meaningfully affect hedges and valuations, so verify the numbers. 3. Abundant liquidity in some ETFs didn't mean calm markets. Expect sharp intraday moves and manage position sizing.
And remember, all market action we talked about happened before the close. We reported what the market did, not what it's doing live.
Investment disclaimer. This briefing was for informational purposes only. It did not constitute investment advice or a recommendation to buy, sell, or hold any security. Analysts note risks and catalysts. Anyone making decisions should perform their own due diligence and consult a qualified financial professional.
Thanks for tuning in. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
That's a wrap for today. Catch you tomorrow after the close for the next recap. Bye for now.